Welcome to our final video of the 2024 calendar year. What a year it has been for us here at Orion Wealth as we have celebrated 20 years in the financial services industry, transitioned our practice to LPL Financial, and starting in January, we'll be adding our second full-time employee as Kiana Davis, our client communications manager, has agreed to come on board full-time. As always, I want to thank you for committing to watching these videos as we discuss key areas of the financial and economic world in which we live. The month of November provided one of the strongest market moves in recent memory as the S&P 500 was up 5.7%. Not to be outdone, the Dow Jones Industrial Average was up 7.5%, and the small cap Russell 2000 Index was up over 10%. The fact that both the Dow and small cap indices outpaced the better known S&P 500 is historically a good sign for the long-term health of the stock market. However, we always want to caution our clients that fast moves up typically are more susceptible to a short-term market pullback at some point. On the economic front, we're starting to see some softness in the jobs market as the unemployment rate is now ticked up to 4.2%. Still very good historically, but higher than we've seen during the post-COVID years. The number of available jobs is shrinking as the JOLTS report showed 7.7 million jobs available, down significantly from the 12 million plus we saw during COVID. Also, most of the jobs are being found in the areas like government and healthcare rather than the traditional private sector areas of manufacturing and industry. The CPI and PPI numbers for November came out and they have begun to stabilize and flatten out over the past few months. The CPI, or the Consumer Price Index, was up 0.3% for the month and 2.7% annually. The most encouraging sign in the data was the slowing pace of housing inflation, which makes up almost 40% of CPI. Housing was up 4.7% annualized last month, which is the lowest reading since early 2022. The PPI, or Producer Price Index, was up 0.4% for the month and 3% annually. This is higher than many economists expected due to the increased cost of food, eggs in particular. This information will help the Fed determine whether to lower interest rates again at their meeting in mid-December. Many economists believe we will see another 0.25% cut in rates and then a pause for the first part of 2025 so more data can be analyzed by the members of the Federal Reserve Board. Two areas we'll be looking at once President-elect Trump takes office next month are taxes and tariffs. Will Trump extend the current tax legislation he signed off on in his last term? Or will he lower the tax rate even more for corporations as an incentive to expand their business here in America? How serious are the tariff threats to China, Europe, and our North American neighbors, Mexico and Canada? Only time will tell to see how serious the tariff threats will be to our trading partners. Tax changes and tariffs could potentially impact inflation, interest rates, and the markets in both positive and/or negative ways over the next 4 years. As we near the end of another year, I wanted to remind you of the access you have to the men and women managing your accounts. I would strongly encourage you to take advantage of the access you have to these financial professionals. You can go online to blog.ccmg.com for the latest insights from Clark Capital, or head to YouTube to watch Bulls and Bears with Herb Morgan. These investment professionals continue to provide consistent information and perspective on financial news and the markets. Finally, we know this has been a very big year for all of us here at Orion Wealth, and we again want to thank you for your patience and support as we have been working through all the changes in our move to LPL. We hope to be back to business as usual in January and look forward to serving you in the year ahead. From all of us here at Orion Wealth, we want to wish you a Merry Christmas, Happy Holidays, and may you have a joyous New Year.